let's bring in our market panel. Squared Private Wealth CIO Victoria Greene and Carson Group Chief Market Strategist Ryan Detrick. Great to have you both here. Mixed day for the markets, to be sure. Not major moves in either directions, though. Ryan, you were on 2 weeks ago. You said you think the bottom's in. We got a record high for the Dow. And in general, markets have rallied since then. Where do we go from here?
That's right. Thanks for having me back. I mean, you mentioned all-time high on the Dow. The Dow started trading 1896. Okay, that's a long time ago, and congrats to investors just hit an all-time high. But what we came on 2 weeks ago, we talked about the idea of August. For whatever reason, August seems more going to have these events that come out of nowhere. 1990, obviously, Iraq invades Kuwait. We've had some debt issues with Europe in 2020, but in 2010. I think this one was a lot like when China surprisingly devalued the yuan back in 2015. The last Monday of August, 9 years ago, like right about now, was the first 1,000-point Dow drop ever, right? There was some massive volatility, I remember that day, the first 1,000-point drop. People thought the end was near. We got through it, right? We're getting through this one again. We can get into all the weeds of it, but one final comment. Mike talked about breadth, right? On Friday, we saw 90% of all the stocks on NYSE higher and 90% of all the volume higher. That's a geeky thing we call a 90-90 day. Keep this real simple. The last time we saw something like that was when the bear market ended in October of 22. Historically, when you have those rare days like we saw on Friday, you tend to get an upward bias. We've been saying it's a bull market. There's no reason we're changing our tune now, especially after Friday.
Okay. Victoria, how do you see this market, especially when the S&P 500 closed down about a third of 1% here? It looks like 56.16 as we settle, but the equal weight S&P has been flirting with new highs in recent sessions, and we saw that rotation continue to play out today with cyclicals and small caps and some of the other less loved until recently parts of the market outperforming.
Yeah, I think it's a fantastic thing. That was the big knock on this bull market was breadth is terrible, and now breadth has risen and come back again from the dead. And we love that. Equal weight is fantastic. We can't just be carried by 7 stocks. We need everything to participate, and we're seeing that. I think one thing that surprised investors was the strength of the retail market. Staples have done quite well recently. A lot of the discretionary that reported last week had pretty solid numbers, especially some of the closing retailers. And so we look at this and say, yes, the consumer is hurting a little bit on the lower end, but the consumer is not dead yet, and we're still seeing some growth there. And we're seeing some upbeat commentary. We're about, I think, 95% of the way through with the S&P 500 earnings. Obviously, a little bit of a big one on Wednesday, but it's been very positive. We've seen beats, we've seen raises, we've seen markets like that, and I think it's a great place to be. Now, we are shifting from a pause to a cut, which typically does favor things like value stocks and small caps. So we are saying we like to hold our core tech, but we are trimming a little bit. Remember, September is historically the weakest month of the year, hands down. It's an election year. October surprises happen. We should see some possible tactical near-term weakness, but absolutely this bull market's intact. Fantastic that other things are working outside of 7 stocks. I think that's a good thing for most investors.
Okay, we got a lot of optimism on this panel today. Ryan, what sectors do you like right now, especially as we do see some profit-taking, some de-risking in tech ahead of those key NVIDIA results on Wednesday? That'll be the most recent pulse that we're taking on this AI trade.
Well, similar to what Victoria just said, we like some of those cyclical areas. Come on for a while saying, look at financials, look at industrials. Just last week, closed at all-time highs. I know people are kind of worried about utilities, the strength we've seen out of utilities. If utilities were the only thing going higher, I think that'd be the message of the market. Maybe something's off. But we're seeing a lot of other participation. And we have like small caps. I mean, small caps are up 10% for the year. They're up 20% the last 12 months. Everybody seems to hate them, but they're historically cheap. There's more earnings growth coming. It's not like we're saying put all your money in small caps. So we are overweight small caps. And the S&P 500 equal weight, if you look at that, overlay that with mid caps, they look almost exactly the same. Mid caps have actually quietly, I think, done really well, and we like that area as well. One more thing, just quickly on market breadth, right? We hit all-time highs on NYSE advanced decline lines, on the S&P 500 advanced decline line, and the Dow advanced decline line just last week. You can have volatility, and we're going to have some. Like we said, September, October, wouldn't be surprised at all if we saw some. But the underlying pinnings from a fundamental and technical point of view still say be overweight equities and expect a year-end rally once we get through the election.